Welcome to the deep dive. We cut through the noise to get you the insights you need. Today, we're looking at Arista Networks. Their Q2 2025 results just landed, and, well, they're making waves. So, what's the story? And what does it signal about AI infrastructure demand? Let's dive in. Okay, first off, the immediate reaction. Tuesday, August 5th, Arista ticker ANET reports Q2, and boom, the stock jumps over 10% after hours. That's a big move. What caused that kind of reaction? What was the big surprise?
Yeah, that was quite something. It really boils down to two things. First, they didn't just meet expectations for Q2, they significantly beat them, crushed them, actually. And second, their outlook, their guidance for Q3 was really, really strong. But the fascinating part, the engine behind this is this huge acceleration in demand for AI networking, specifically for AI data centers.
Right.
It's not just general tech growth. It's very specific.
That makes sense. We keep hearing about these massive AI models needing huge networks.
Exactly. Thousands of GPUs needing insane bandwidth and super low latency. Arista builds the fabric for that. That's their sweet spot.
Okay, so let's get into those Q2 numbers. For the quarter ending June 30th, what did they actually report?
All right, so non-GAAP diluted earnings per share, EPS that is, came in at $0.73.
Okay.
Analysts were expecting, what, $0.65?
Yeah.
So a significant beat there.
Yeah, definitely. And revenue.
Revenue was $2.21 billion. Again, nicely ahead of the $2.11 billion expected.
So solid beats on both top and bottom lines. How does that look compared to, say, last year or last quarter, growth-wise?
Good question. The official release puts revenue at $2.205 billion, to be precise. That's up 10% from just the first quarter of 2025.
Wow, sequential growth like that is strong.
And year over year, compared to Q2 2024, it's up a massive 30.4%.
30%. Okay, that shows real momentum.
Absolutely. And another thing, Arista CFO Chantelle Breithaupt highlighted a big milestone. Their non-GAAP operating income. It crossed $1 billion for the first time ever in a quarter.
$1 billion in operating income, that sounds huge. For listeners, what does non-GAAP operating income really capture? Why is that a big deal?
Right, so operating income basically shows profit from the core business operations before interest and taxes. Non-GAAP, as we'll probably discuss later, adjusts for certain items like stock compensation. Hitting $1 billion shows incredible scale, efficiency.
And profitability from their main business.
Exactly. It signals that the demand is strong, yes, but also that they're managing the business really well. It flows right down to the bottom line. Non-GAAP net income was $923.5 million. That's the 0.73 cents per share we mentioned. Compare that to $672.6 million, or 0.53 cents per share, just a year ago in Q2 2024.
That's a substantial jump in profit. Very clear picture of financial health there.
Definitely.
Okay, so Q2 was stellar. What about looking forward? You mentioned strong guidance for Q3. What are they projecting?
For Q3 2025, they're guiding for revenue around $2.25 billion.
Okay, so even higher than Q2.
Yes. And again, that's above what analysts were forecasting, which was closer to $2.12 billion.
Right.
They also gave guidance on margins. Non-GAAP gross margin around 64% and non-GAAP operating margin about 47%.
Maintaining strong profitability even as they grow revenue. That's confident.
It really is. It underscores their belief in their market position and the continued demand, especially, driven by AI.
Okay, this is where I get really interested. The numbers are impressive, sure, but why? What are the moves, the innovations Arista is making that are actually powering this, particularly in AI?
Right. It's not just luck. They're making very deliberate strategic plays. For one, they've expanded their offerings for campus and branch networks, but specifically with an AI focus. Think new switches, yes, but also new Wi-Fi 7 access points.
Wi-Fi 7, okay. How does that tie into AI?
Well, Wi-Fi 7 offers much higher speeds and lower latency. It's crucial for running AI applications reliably at the edge where data is often generated without needing a physical cable. Think real-time analytics on a factory floor or in a retail store.
Got it. So enabling AI beyond just the giant data center.
Precisely. And they also made a key acquisition, the VeloCloud SD-WAN business from Broadcom.
SD-WAN. Software-defined wide area networking. What does that add for them?
It's about connecting distributed locations, data centers, branch offices, clouds more effectively and securely. This VeloCloud acquisition really expands their global WAN services. It complements their existing routing products like Cloud EOS and their 7000 series routers.
So a more complete package for enterprise networking, especially for companies with complex, spread-out operations running things like AI.
Exactly. It helps manage that complex traffic flow needed for distributed AI workloads.
And are others noticing? Is the industry recognizing these moves?
Oh, absolutely. Gartner, for instance, in their 2025 Magic Quadrant for enterprise wired and wireless LAN infrastructure.
Always an important one.
Right. Arista landed in the Visionaries Quadrant. But here's a cool part. Gartner highlighted them as having the highest ability to execute within that quadrant.
Highest ability to execute. So Gartner is basically saying they're delivering effectively on their vision.
That's a strong way to put it. It's a major endorsement of their strategy and their operational capability.
And I saw something about manufacturing in India, expanding their footprint there.
Yes, that's significant too. They've deepened their commitment through the Make in India initiative. They're now manufacturing key campus switches, data center switches, and even those Wi-Fi 7 access points domestically in India.
Smart move for supply chain resilience and tapping into that market too.
Definitely. And one last point on strategic moves leadership. They appointed Todd Nightingale as president and COO.
Oh yeah, I saw that name. He was CEO at Fastly, right? And before that, big roles at Cisco.
Exactly. He brings a ton of relevant networking and cloud experience right into their top leadership. That's a significant hire.
Okay, let's circle back to something you mentioned earlier, GAAP versus non-GAAP. We hear these terms all the time in earnings reports. You gave the non-GAAP EPS and operating income. For listeners trying to really understand these financials, what's the difference? Why do companies report both?
It's a really important point. So GAAP stands for Generally Accepted Accounting Principles. Think of it as the official rulebook for accounting in the U.S. It's standardized, audited.
The official score, basically.
Right. Non-GAAP figures, however, are adjusted numbers that companies provide in addition to GAAP. They basically take the GAAP number and then exclude certain items.
Like what for Arista?
Typically, things like stock-based compensation expense paying employees with stock. Also, amortization of intangible assets, which often comes from acquisitions. And maybe gains or losses on investments, plus the tax effects of these adjustments.
Okay, so why exclude those? What's the rationale?
The idea companies put forward is that these non-GAAP numbers give investors a clearer view of the underlying ongoing operational performance. They argue things like stock compensation or acquisition costs can be lumpy or aren't part of the core day-to-day business, so excluding them shows the fundamental health and trends more clearly.
So it's meant to smooth out the picture, show the core operational engine, even though GAAP is the official standard.
Precisely. It's often how management looks at the business internally for planning. It's an extra lens for evaluation.
But I guess you still need to look at the GAAP numbers too, right, to see the full picture, including those costs.
Absolutely. You need both. Understand what is being excluded and why. Non-GAAP is a useful tool, but it shouldn't replace the GAAP figures entirely. It's about using all the information available.
Makes sense. Now, zooming out a bit, one of the sources we looked at, investing.com, mentioned this broader market feeling. That valuations are high, investors may be getting a bit jittery, looking hard for real growth stories. How does Arista's performance, especially this AI-driven growth, fit into that search for high potential opportunities right now?
That's a great connection to the bigger picture. I think Arista's results are a perfect example of this. Even if the overall market feels stretched or uncertain, there are specific sectors, specific companies, benefiting from powerful fundamental shifts. AI infrastructure is clearly one of those. Arista's success shows that targeted investments in companies providing essential technology for these major trends, like AI, can still offer significant potential.
So it's less about broad market bets and more about finding those key enablers.
Exactly. Companies providing the picks and shovels, so to speak, for the AI gold rush. Arista is clearly positioning itself as a critical supplier of that networking infrastructure. Their growth isn't just general market lift. It's tied directly to that specific, explosive AI demand.
Yeah, this really paints a picture. Arista Networks' Q2 results, the strong guidance, it all points to a company hitting its stride right as the demand for AI networking is really taking off, exceeding forecasts, smart acquisitions like VeloCloud, that Gartner recognition. They seem very well positioned.
For sure. And keep an eye out. Their Analyst Day is coming up on September 11th. We'll likely get even more detail on their strategy and roadmap then.
Definitely one to watch. So thinking about all this, what really stands out to you about Arista's focus on AI? As AI keeps reshaping everything, what kind of infrastructure is truly needed for that next wave? And how crucial are companies like Arista to making that future happen? Something for all of us to think about until the next deep dive.